Hi, I'm Nicole with Kingdom Money Sense. Welcome back. I'm glad you joined me. Today, we are going to be discussing the power of the infinite banking concept as regards to this contract that you now own and control. So, when you start implementing the infinite banking concept for you and your family, you will be utilizing a dividend-paying whole life insurance contract. It is a private contract between you and the insurance company. Some things that people may not realize as they start to take this journey is you are the owner of that insurance contract, not the insurance company. Now, it will stipulate the conditions that must be met by the insurance company. They have guaranteed interest rates that they offer in the contract that will be met every year, and they have some non-guaranteed dividend rates that they have projected to pay out. The beautiful thing about the companies that I work with is that they've been around for over 100 years. They've paid dividends all of those years, even during the Great Depression. So you can know that the history of the companies is solid. I don't utilize any fly-by-night companies, any companies that don't have a good track record. And because of the guaranteed conditions of these contracts, there are even some insurance companies that don't even write these kind of contracts because they know they are contractually obligated to pay what they've promised you. The companies I work with are extremely conservative. If they are putting out projected dividend numbers, more than likely, 9 times out of 10, it will be that number or higher in the non-guaranteed rates. So, as we start getting into policy design, as we start getting into how to adequately fund this system of policies to achieve what you want to achieve, whether that be passive income time and the guaranteeability of that, whether it be you really want to create a fantastic generational wealth transfer system. This system works perfectly for that. I would say that's probably what I focus most on. I really want to be able to bless not only my children, but my grandchildren and my great-grandchildren and their children. The system I have put in place actually guarantees that great-great-grandchildren that haven't even been born yet will be benefiting from the system I put in place today. So there are several things to talk about regarding these type of things. The control that you have. As I mentioned, you own the contract. There are 3 parties to a dividend-paying whole life insurance contract: the owner, the insured, the person being insured, the life, and that does have to be a live person. I sometimes get asked, hey, can I insure my business? No, that's for the property and casualty folks. But you can insure your business partner. You can insure key man employees. If you are an individual, and you can obviously insure your spouse, you can insure your children, your grandchildren, you can even insure your parents. So what we look for when we're setting up these system of policies is, who do you have an insurable interest in? And the insurance companies determine that by, if this person's life were to end, how would that impact your life? And so that's why we say business partners, key man employees, children, grandchildren, parents. I've even seen policies written on siblings. So if you're thinking to yourself and watching this video, well, I'm not in good health, I probably would not qualify for one of these policies, start thinking, who do I have insurable interest in that would be willing to allow me to take a policy out on them if it benefited them at a later date. So it kind of works this way. You have the owner, the insured, and then you have the beneficiary. Now, the beneficiary certainly can be an individual. It can be a trust, like a family trust, or it can be an entity, like your business. So you're assured that the money goes directly to who you want it to go to. Beneficiaries can be changed at any time, and so can owners. So if you choose to gift a policy, say to one of your grandchildren or children later on down the line, you can certainly do that, and that has been done. Nelson Nash started and funded many policies that funded his lifestyle while he was living. And then as he got closer to his graduation day, as he called it, that he very much looked forward to, he started gifting policies that he owned. And I think he had 43 policies total that, and most of those he did gift, either to the person it was taken out on, like one of his children or grandchildren, or other friends that he had that he developed very close relationships with in his lifetime. He actually would just gift them a policy that they then became owners of. You can't think of any more control than that. Also, when borrowing against the equity of your policy, this is such a powerful tool. And especially my real estate investors out there who may be watching this. Have you heard of hard money lending? I'm sure you have. How neat would it be if you could become the hard money lender and actually you have that pool of money through the equity in your dividend-paying whole life insurance to be able to lend out, and even while your policy continues to grow, being paid interest and dividends, you now have the ability to loan that money out and charge interest and make money on that. It's like your money is in two places at one time earning money. I don't even think you could calculate the possibility of wealth growth when you start utilizing your system in this way. So I encourage you all to start comparing. How much control do you have when you take a loan out from the bank? Who determines the payback schedule? Do you determine that, or does the bank determine that? One of Nelson's rules in the book, Becoming Your Own Banker, he discusses the golden rule. And the golden rule is, he who has the gold makes the rules. In the instance when you start structuring your system of policies with the infinite banking concept, is you become the owner of the gold and you get to make the rules. So whether that is you are a real estate investor yourself and you take a policy equity loan out and go flip a house, when is your first payment due? When you decide. How you want to pay it back? You decide. So how does that contrast into how we've been taught to go about financing the things of life, which is borrowing from a bank? They determine when you pay the loan back. They determine how much needs to be paid back on a monthly schedule. So let me encourage you in the power of the infinite banking concept and the control it will give you in your financial life. I hope you've enjoyed this video. We're building our wealth on the rock and not sand. Have a great day.